We have one of the longest running titles in crypto conference history. Is the Wall Street herd. I think the only difference is still coming. I actually think at some point we should switch it up and have is the crypto herd coming to Wall Street? Because I feel like more and more, we had Bullish took over Equinity today, an old guard Wall Street firm. I think more and more they're starting to come to us than we are to them, or at least we can think that until we actually completely converge. Okay, so I won't do a good job of it. I'll let you introduce yourselves, starting with you, Nicola.
Yeah, nice to see you all. Nicola White. I'm the VP of Crypto Institutions at Robinhood, also responsible for our Bitstamp exchange product.
My name's Ian. I'm the president at Ondo. We do tokenized treasury stocks and ETFs.
I'm Boris Alergant. I lead GTM at Babylon. Babylon is an infrastructure company that builds native solutions on the Bitcoin network. Our first product was Bitcoin staking, and that was a way for folks to earn yield on their Bitcoin, passively holding it. That product now has about $5 billion in TVL, and we're now launching a Bitcoin-backed native lending product as well.
Okay, and I'm Michael Bucella, co-founder of Neoclassic Capital. We're an early-stage venture firm investing at the intersection of Wall Street and crypto, as well as Asia and the US. So we do a lot of kind of differentiated stuff. So, all right, with that, we should start with the title. So, is Wall Street coming into crypto? Where are we seeing signs of it? Where does the narrative fit the reality, and where does the narrative not fit the reality? It's an open-ended question. I'll let any of you start.
Well, I think it's very clear that Wall Street is coming to crypto. I feel like every single week there's another announcement that comes out. Ondo had a couple announcements with Wall Street firms over the past couple of weeks. We announced a partnership with Broadridge to enable people to actually vote with tokenized stocks to really bring the experience closer to what people are used to in a brokerage account. We had an announcement with the DTCC on Monday where we're joining their pilot in order to tokenize securities in the US. So I think at this point it's quite clear that Wall Street is coming onto blockchains as well as crypto.
Yep.
But obviously, a lot still needs to happen for all these flows to really come in. I think we're really still at a stage where infrastructure is being formed for stocks, ETFs, and treasuries. I think that's 24/7 trading on private networks, right? Mostly not yet on public blockchains. So Wall Street is coming, but with a lot of these things, it takes slightly longer than what people expect. But all the partnerships between Wall Street and crypto players is really starting to take shape, I think, right now.
And I think if you look at where we were kind of a year or 2 years ago, a lot of the conversations we were having was about trying to educate people about what blockchain was, what the benefits were. We're not having those conversations anymore. Everyone's kind of bought into that idea, and now it's about how do we help them build, how do we help them get access to their clients, and everybody's at different periods of adoption, right? Some people are just starting and need a lot of help. Other people are pretty sophisticated and they're building that next generation or next layer of offerings. And so it's really about meeting customers where they are and helping them adopt. But I'd say there's not a traditional finance Wall Street company we've talked to that has said, this isn't something I'm thinking about.
Yeah, it seems like capital appreciation and Bitcoin was really kind of this gateway drug for a lot of institutions and for a lot of folks into the space. Once the capital appreciation has kind of not been the story, especially these last few months, I think folks are looking at capital efficiency. And that becomes more and more of an important aspect of crypto and kind of how we're starting to blend with Wall Street. Is how do I make my digital assets work for me beyond just capital appreciation?
Yeah.
And I was just going to say, to that end, I don't think if you had looked at where we were 2-3 years ago, you would have thought we would have been talking about minute-by-minute yield on stable coins or tokenized treasuries or pick your flavor of yield-bearing assets. And that, for institutions, is the gold mine, right? There's no longer this idle capital that's sitting on the sidelines going to waste.
And it's so funny you mentioned that, because there's a lot of things that Ondo has built, including weekend minting and burning. People can come to us over the weekend and subscribe to a tokenized treasury just using stable coins on a Saturday or a Sunday, right? That to me was the most normal thing ever. We also pay our yield on a daily basis. Most normal thing ever. It wasn't until I started investing myself into money market funds where I was like, wait, I get the yield every month? Why is that, right? Like, or the fact that you can't even subscribe over the weekend to a lot of these products, that's just the way TradFi operates. So I'm oftentimes surprised at how TradFi works and how poorly designed it is in certain areas, because I think crypto is already at a point, crypto's a broad term. The tokenization companies are already at a point where we can do a lot of things better than what TradFi can. Sometimes we're still limited by the TradFi rails that don't work in the weekend and the like, but by and large, the value prop of a tokenized treasury in many instances is already better than what you can do in a treasury. But a lot of people don't know about it. But you tell a TradFi firm, like, hey, we can do weekend minting and burning of this stuff, no problem. Their minds explode. They wouldn't even know how to do it.
Well, and they don't know about it until something happens over the weekend, and then they get a margin call, and they're like, what is this, and how do I deal with it? And so I think that those are the conversations we need to have pretty early, because I think on a regular day-to-day, they probably don't need to think about minting and burning over the weekend.
Nope.
But, you look at October 10th, we were bridging slow banking rails to fast banking rails all weekend because people hadn't thought through how do they get money onto fast banking rails if there is a stress environment.
Yep, and I think overall though, it's a symbiotic relationship, right? There's a lot to learn for crypto from TradFi and TradFi from crypto. Obviously from crypto, they're learning 24/7 liquidity and the benefits of that, right? And then the new rails for payments, things like that. Crypto is learning a lot on the institutionalization of what it means to really own an asset and what I can do with it. And again, I'm going to kind of drive on that point of capital efficiency. Holding Bitcoin is just not enough, especially if you're in a fund, right? How do you make that crypto or those assets work for you on top of just capital appreciation?
Okay. All right, so we'll talk through respective businesses, because I think it's interesting to have like the backdrop of what you guys did historically, what you're doing today, the evolution of that. So I'll say what I think it is, and then you correct me. So Robinhood, obviously a trading platform, primarily retail on the front end, market makers on the back end, distribution of all forms of product. I don't know if you created the 0-day option, but you sure as hell own it. And you guys have a lot of creative products for retail to partake in the markets. Ondo, back in the day, tokenized treasuries obviously evolved. We were talking backstage, and you guys have, 1% of surplus float, for example, is tokenized via Ondo, which is pretty wild, and apparently traded in trading groups in Japan. I'm sorry, in China. And then Babylon initially was this idea of yield on Bitcoin, and that's kind of evolved as the world of vaults have evolved. All right, things have changed a lot, I think, for each of your firms. I wouldn't necessarily any of you made hard pivots, you just sort of evolved with it, but what does Wall Street coming to crypto mean for you? So for you, is it more, okay, we're gonna get more forms of product to distribute to retail, or is it we need to rely on the market maker depth of liquidity before we ever lay anything out to those folks? For you, is it, we gotta wait for DTCC and BNY or partner with them to get the infrastructure in a place where we can then continue to scale and scale differently? And then in Babylon, similarly, do you have to wait for clarity on vault regulation and how you can distribute those products? So maybe help me understand a little bit more about, and kind of tell us some of the sexier stuff, like stuff people want to hear about versus the usual headlines. How does the reality differ from what I've stated, if it does at all?
So I would say on the institutional side for Robinhood, it's changed pretty dramatically over the last year.
Dramatically.
Dramatically.
I like that.
We bought Bitstamp in June of last year, really as a play to get into the institutional space, because we saw that things were starting to evolve and change. We're probably thought we would have clarity by now, but we're still waiting on that.
67%?
67% before we
market?
walked on stage,
Okay.
but it was at 45 last week, so I'll take that as a positive.
Yep.
And so for us, it was really about supplementing the retail flow with the institutional flow. We really feel that the barriers between retail and institutional should be a lot lower. Yeah. The trades should be able to match amongst the two liquidity pools. Historically, in traditional finance, they've been segregated and separate, and so Bitstamp was a play to really allow our retail clients to get more of an institutional product, and also at the same time service institutions and bring some of the ease of use and adoption that Robinhood prides itself on to the institutional space. Because honestly, I don't think a lot of people have really been spending a lot of time on institutional infrastructure. because we weren't sure if it was even something that was going to be on the table.
You have a good business otherwise, you know. Yes.
Yeah, for Ondo, you mentioned we do tokenized treasuries, stocks, and ETFs. At this point, we feel like we've gotten a very good tokenization engine and distribution rails. Our products are growing very healthily. It's mostly offshore, but it really is limited to spot trade, right? There's no ability really to do leverage on stocks, although you've got, Trade XYZ, Hyperliquid really going in that direction. That's also where Ondo is starting to focus more and more. We're going to launch a perps platform pretty soon. The ability to use your stocks as collateral on those perps, I think that's going to be pretty meaningful from a capital efficiency perspective. But really leaning in on how do you use tokenized stocks as collateral on chain, and how do you make the trading experience ultimately better than what exists in a normal brokerage account? Paired with that, for the first time, we now have tokenized stocks living on the same rails as commodities, crypto, ETFs, everything together. Prediction markets. How can you create portfolios and construct these things in a way where you can really do things that before in normal asset management you couldn't, right? All of a sudden, anyone permissionlessly can probably create the equivalent of an ETF and throw in some crypto, some commodities, throw in a prediction market, stocks, whatever it is you want to create. Doing that in a permissionless way with vaults or a different implementation. And then how do you bring the two together so that those same vaults in an active capacity can do the carry trade on the perps, right? Bringing together that ecosystem is where Ondo is going next, and all the stuff that we're building now. From your other angle of how does TradFi come into all of that? Right now, as the issuer for a lot of things, we are mostly capped and limited by what TradFi can do. Because we are operating 24/7, TradFi is not. Whenever TradFi is on, we can mint and burn and buy the underlying assets for all of our tokenized stuff. When TradFi is not on, we run into issues on chain. And so all the stuff that the DTCC is doing, the NASDAQ, the New York Stock Exchange, moving towards 24/7 trading, I think that's going to be so helpful for companies like Ondo, because then we can take all of that liquidity, wrap it up permissionlessly into our products and platforms, and make it available offshore wherever needed. So that interplay and solving a lot of our infrastructure needs, particularly over the weekend, is where a lot of our TradFi partnerships come in.
Got it.
Regulatory clarity for us definitely is important, but we look at regulatory clarity and regulation as being region specific. Obviously, regulatory clarity in the US would help us a lot and grow with traditional institutions. However, a lot of these institutions that I speak to, regulation isn't the main blocker, right? It isn't the biggest challenge for allocating capital. There's offshore vehicles, there's very different ways where they can allocate that capital. So for us, regulation's important, but I think it's more of the value prop is what they're chasing. And what the value prop we're providing is safe, native Bitcoin with the cheapest borrow that's going to be in DeFi. And that is something that is a very compelling case to a lot of folks. Again, as capital efficiency becomes more of the forefront of the discussion, especially with kind of asset prices where they're at, folks are trying to figure out, how do I squeeze out every little basis point of yield I can on my digital asset? But obviously, look, I would love to be partnered with JP Morgan tomorrow, right? I won't say.
So that was my next question. So every time we spoke about this in the past, it was, is Wall Street coming? And the reality is, we don't necessarily want Wall Street. We want their capital, right? The reality is, we would prefer not to deal with Wall Street and all of their, sort of antiquated ways of doing business. We just want their money. Now at this point, we're starting to see the money trickle in. But we're also starting to see a lot of the capabilities or lack thereof trickle in as well. We're trying to break molds. They have molds that they're very comfortable with that have made them tons of money over the last century. So I guess I can ask this question first. And I'm going to go off script on another question following this about this on, we're on and they're off kind of thing. And then I'm definitely bringing in agentic finance now, because I didn't think about that in our pre-panel prep. So do we actually feel like do we want to continue down this path of full integration? Let's just say the administration wraps up in 2 years and a more contentious one steps in, and we haven't quite gotten where we needed to, and we're relying on that completion? Or do we want to carve two parallel paths where we're trying to kind of run experimental, lesser regulated activities while we're also trying our absolute best to, do right by the SEC so we can get JP Morgan as a partner?
Well, I think you're already seeing both happening in a way. Like, there is an entire offshore ecosystem of crypto and tokenized stocks and DeFi that is flourishing. That's where stablecoins also originally found product market fit, right? And you're starting to see the same thing with tokenized treasuries and tokenized stocks, in particular ETFs, et cetera, and novel product structures, right? Take hyperliquid, perpetual swaps, very much offshore. I don't see a world in which everything that happens offshore finds a home in the US the way that it's happening offshore. That's just not gonna happen, right? There's always going to be more permissionless innovation happening offshore. Now, that doesn't mean that what's happening in the US is irrelevant. Quite the contrary, because a lot of the rails that you need in order to have the permissionless stuff also work better with better liquidity and all these sorts of things can still occur in the US. And I think that's what's happening right now and what we're also trying to build with our partnerships at Ondo. But I think both worlds will always remain a little separate. I don't see banks get fully comfortable with permissionless stable coins anytime soon. They're going to do tokenized deposits, right? Just in the same way that you're going to have the DTCC, NASDAQ, New York Stock Exchange, name your TradFi, do tokenization and tokenized securities, but probably in a permission environment. But running 24/7, so it's going to be a step-up improvement. But they're not going to be issuing the wrappers that work in DeFi in the way that Ondo's doing.
And I think if you look at where capital sits today, right, a lot of capital still sits at large banking organizations. And I think, if you're asking people to move from those, I think that's going to be a pretty tough ask, right? Like, my mom's not going to take her money out of the bank that she's banked with for 30 years, but she might put 5% of her crypto into a portfolio, her portfolio, if that bank had crypto services available. And so one of the things that we're spending a lot of time on is how do we help banks and platforms unlock the crypto offering to their broader client base in ways that feels comfortable and natural for those client base, right? You kind of have to meet some of these people where they are, right? You're always going to get, to your point, the DeFi community that's going to go where they want to go. But for everybody else, you need to meet them where they are. And part of that is unlocking this through things like, we offer a Bitstamp as a service platform where we'll partner with banks so that they can access our liquidity and offer crypto out to their customers.
Right.
That's how we're going to break down those barriers and get access to that capital. But look, another big unlock is clarity, right? We need to wait on that because a lot of these banks are building, but they're building waiting for clarity to pass.
Yeah, your mom is comfortable with a Morgan Stanley ETF, but if you told her she lost money because of a kelp DAO hack, I don't think she'd be too thrilled about.
I don't think she knows what a DAO is, but we could start there.
Anything to add?
Yeah, look, I kind of echoing what everyone's kind of said here is we've been building in two paths forever, right? There's always been the offshore and the onshore path. And the onshore side, the US domestic side, and a lot of these institutions are seeing the efficiencies of the technology. And they are picking and choosing those specific components that make the most sense and that'll ultimately drive costs down and bring the bottom line higher. At some point though, that does merge, right? When that merges, I don't know, there's probably a poly market for that as well, but end of the day, it's not gonna continue like that forever, in my view. I think it's gonna get to a point where both sides are gonna have to kind of come together and it becomes stronger, right, that way. Because when liquidity gets aggregated in that sense, right? Otherwise you have two separate pools of liquidity, you don't get the same efficiencies when you have one larger pool of liquidity.
Yeah. There might be a HIP 4 market for that soon too. Right? So when you think about product development, for example, you mentioned you go and you speak to the banks and you meet them where they are. So you understand their client base, how can we help you with our offering, but you prepare offerings for this. How do you think about product development? Robinhood has incredible distribution across both institutional and retail. Ondo has, a scaling, distribution channel through their products, and then similar with Babylon with your community. What is the process What's the most recent product you've developed, and do you feel, is it a push or a pull situation, is what I'm trying to get at. And this is in tech broadly when you have a product-focused business. You guys kind of have a product-focused business. How do you think about that?
So our latest product rollout was perpetual futures in Europe. And we had a couple banks that right from the get-go said they wanted to partner with us, so that was more them like pulling than us pushing. But we do a lot of pushing, right? We do a lot of education. I think the one thing that has landed well with these more traditional finance regulated firms is regulation. And it's maybe an unpopular thing to say on a crypto panel, but it is one of those things that the crypto industry hasn't done itself any favors in the last couple of years, right? Whether we look at October 10th flash crash, where we look at any of the lending stresses that went through the market a couple years ago, I think that where you're going to get this adoption is by spending a lot of time on that regulated infrastructure layer, right? How do you think about trading limits and circuit breakers and some of those things so that they can offer those out to their customer base? And again, we go back to this bifurcated world where you're going to have less regulated platforms and venues where there's probably less rules and people that play in there hopefully understand what they're getting themselves into, and then there'll be this more regulated space, and hopefully, to your point, they'll come together at some point. But right now we're operating in two very different places because again, we have to meet people where they are.
So those banks, they came to you, right? So the Wall Street herd came to Robinhood and said, we really want to start looking at and trading perpetual futures in any specific, in equity indices, or was it?
In crypto in particular.
Crypto.
So it's a MiFID-based product. So it's in Europe. They're European banks that have come in and said, like, we want to start looking at this. How do we do it? It's a place that they're used to working in, right? They understand MiFID regulation. It fits broadly.
Unfortunately. That's a rough
I mean,
one.
I've operated in MiFID for a while now, so pretty familiar with it. But yeah, it was something that they understood that fit into their risk framework, that their boards would understand. And so it was a pretty easy conversation.
Yeah, and so you roll that out with a few banking clients, and it's, does it automatically hit across the board, or you kind of ramp things up with them over time? Or?
So we're still rolling it out, right? Like, I mean, one of the things, I worked at a large bank for over a decade, so I can say this, like, integration takes a really long time at these banks, so we're in the process of rolling it out.
Yeah.
But yeah, it starts small. It starts with a small percentage of their customer base, and then it ramps hopefully quickly.
Yeah.
But probably more slowly than I would like.
Price action helps, probably. And then
I think for us, so one of the partnerships we did was with JP Morgan, and it was with our permissioned tokenized treasury product. So most of our products are permissionless offshore, but we have one that's global. It's permissioned. It's a tokenized treasury fund. People can subscribe into it 24/7. You earn yield on a daily basis, and you can even do this on a Saturday, right? That in and of itself, as a value prop, is mind-blowing to many in TradFi. So you don't really need to go full-on permissionless perps with some of these TradFi clients, just offering them where Ondo started, quite frankly, 3-4 years ago at this point, is in and of itself a good place to start. Now, the problem for the JP Morgan clients was, they want to be able to actually subscribe into this product with their JP Morgan bank account. They don't want to use stablecoins. Oftentimes, they don't really trust it, or they don't know how to. They don't have the infrastructure set up. So we said, all right, we're going to enable you to essentially subscribe into this tokenized treasury fund just with your JP Morgan money. And we turned that on 24/7 with the Connexus platform. So JP Morgan clients that are also onboarded to us can use their JP Morgan money to subscribe to our tokenized treasury fund, even on a Saturday, and we'll mint them the token instantly so they can start accruing the yield. That is a small place to get started, but it essentially for a lot of the JP Morgan clients is a pretty big deal. And then from that, you start building into other things where they can't just do it with tokenized treasuries. Maybe down the line they could do it with tokenized stocks or other types of products. But you have to start small with your, in their eyes, least risky product. Get some adoption, very small flows initially, and then really just build from there.
Yeah, for us, we definitely listen to the market, right? Our market are Bitcoin holders, at least for our first product. And what do Bitcoin holders hate? They hate giving up their keys. They hate wrapping their assets. but they do want to earn some sort of income and some sort of yield. So on the staking side, look, we've had various Bitcoin miners, institutions, hedge funds, and we've had distribution through folks in the retail space like Kraken. On the lending side, and why we came up with this product is because we really surveyed our customers and these Bitcoin holders. The number one thing they want to do is to borrow against their Bitcoin. They want some sort of capital efficiency. The only way they can do that on chain right now through DeFi is by bridging and wrapping. You have Wrap BTC, CB BTC, and they're great products. They serve their purpose. But for a Bitcoin holder, that means you are giving up your keys, you're holding your assets, your Bitcoin somewhere else, and you're exposed to the various kind of risks associated with that. And therefore, we really went heads down and built out this new product, which is a Bitcoin-backed borrowing product, which locks Bitcoin natively on the Bitcoin network, and it'll be recognized as collateral on Ethereum, and we're actually partnered with Aave V4 on this one. And you'll be able to actually borrow against your native Bitcoin without going through the bridging and through the wrapping. If you look at the TAM of Bitcoin, right, we're talking about, what is it, 1.7 trillion right now, plus or minus, maybe a little higher today, right? Less than 0.5% of that is actually in DeFi and is actually participating and is actually doing something. And we're really unlocking that. Now, you can borrow right now against your Bitcoin through centralized counterparties. Those rates, range from 6 to 13%, which is kind of crazy. And you're giving up your Bitcoin, you're giving up custody, you're taking on all those risks. And that was a big no-no. And actually, today, we announced that Go Mining is committing 1,000 Bitcoin to be used in this trustless Bitcoin vault to be borrowed against for capital efficiency. So we are building really for our client base, and we think this is something that resonates with a lot of institutions as well.
Nice. Congratulations.
Thank you.
All right, so I'm going to skip on the agentic payment stuff. We're all going to benefit from it. It's going to be great. One last question, because we have a minute and a half left, and this is, I want this to be a little bit like sharp if you can. Clarity Act passes tomorrow or on the actual day of the vote. What does that unlock for each of your businesses? Something very specific it unlocks for each of your businesses.
Tokenized stocks and securities in the U.S. at scale.
I'd love to see private equities, tokenization of private equities in the U.S.
And we can get real.
I love the distribution angles through JP Morgan.
Is anybody from JP Morgan in the audience? Because
Anybody raise your hand, please.
Babylon's ready.
So good.
Babylon's ready for you. Okay, I'll give us the 55 seconds back, because if you talk about agentic payments, it'll never stop. This was great. Thank you very much for your thoughts, and thank you for listening.
Thanks
Thank
all.
you.